This is your technical update from the LMAX Exchange Research and Analytics Desk for Thursday, December 10th, 2015. Euro dollar. So the euro continues to extend gains off that recent multi-day low down in the 105.20 area, with the market now breaking back above the 109.80 recent high to break above 110 and now open the door for a fresh upside, potentially towards the 112 area in the days ahead. The latest consolidation that we had seen off that 109.80 high down to the recent lows around the 108 area has been broken, and that was a 200-point consolidation, which suggests a projected measured move of the same size, which would take us up towards the 112 area in the sessions ahead. Initial support comes in around 111, which is the 50% fib retracement off of that move from August, that August high that we saw all the way up at 117.15, about down to the recent low that we saw last week around 105.20. Sterling dollar. So cable continues to be confined to a broader downtrend. The market has made a series of lower tops and lower lows and is expected to make a fresh lower top now, somewhere ahead of 153.36, ahead of the next major downside extension below the recent lows that we had seen down at 148.95 and towards the 2015 low at 145.66 further down. So this rally, despite being impressive, is still classified as corrective while the market holds below 153.36 with only a break back above to compromise the downtrend. Dollar yen. So a significant break in dollar yen after several days of consolidation between 122.30 and 123.76. The market finally decided to break down below the range base, and the break is significant as it opens the door for a further acceleration of declines in the sessions ahead back into the 119 to 120 area. Any rally should be very well capped now into the 122 and certainly ahead of 123 in favor of that fresh weakness. At this point, only back above 123.76 would compromise the current structure, with a lower top now sought out, potentially eventually for deeper setbacks and acceleration towards that August base at 116.12. Euro Swiss. So Euro Swiss remains confined to a tight consolidation, although the market is in a recovery structure off those record lows that were seen earlier this year. So the consolidation is classified as a bullish consolidation, with the market seen eventually higher beyond the 110.50 peak that was seen back in the month of September. At this point, any setback should be very well supported ahead of 107, with only a breakback about below 107.14, which is the range base, to compromise the current recovery outlook for Euro Swiss. Aussie dollar. So despite the market being well supported on dips in recent trade, overall the downtrend remains intact here after the market stalled out yet again ahead of 74 by 73.85 a few days back. Really only back above this level would compromise the structure, with the market expected to continue to be well capped into rallies in favor of the next downside extension back towards a retest of the multi-year low just ahead of 69. Dollar CAD. So dollar CAD has broken to fresh 11-year highs after recently taking out the previous 11-year peak from September at 134.57. The market has since broken up above 136, although with daily studies looking a little bit extended at this point, there is risk for a bit of a pullback before we see any meaningful resumption of gains. But any pullbacks here should be limited to the 130 area, with ultimately only back below 128.30 would really compromise the highly constructive outlook for dollar CAD. So in the end, the market should continue higher, potentially now towards the 140 area, but there is risk for some form of a short-term pullback, which ultimately or ideally should be supported ahead of 130. Kiwi dollar. So Kiwi has been consolidating over the past several days. Dips have been very well supported, but again here overall the market remains within a downtrend, just like with Aussie dollar, and any rally should be very well capped with a medium-term lower top sought out in the 69 area in favor of the eventual next downside extension back towards that August base around 62. SPX 500. So the S&P 500 is showing signs of rolling over after stalling out ahead of the May record high recently in early November at 2117, and this suggests that the market could be poised for deeper setbacks. A break and close below 2003 recent lows that were seen on the 16th of November would be a significant development, confirming the formation of a potential lower top and would accelerate declines back towards the 1870 low that was seen back in late September. Gold. So gold is showing some signs of a bounce after recently trading to multi-year lows at 1046, but the market will need to establish back above 1100 to confirm such a basing outlook and accelerate gains back towards the highs that were seen back in the month of October, mid-October, October 15th, at around 1192. At this point, inability to take out 1100 while the market is possibly showing signs of a base will keep the pressure ultimately on the downside for a potential break back below 1046, exposing that psychological barrier at 1000 further down.